So it's a timely issue, but it's also an eternal issue, if you will. And before we start, I'd just like to tell you a very small story. At the moment in Sigla, which is the company that I'm running, we're doing a study on corporate responsibility or corporate sustainability and the board. So how do corporate boards work on and manage sustainability and ESG issues? And one fascinating story here is from a board chair of a large financial institution who said about the financial analysts that actually, you know, they don't care. But I don't care if they don't care. We put it in the quarterly reports anyway, and soon they will start to care. So the real value of ESG is an issue for board chairs because they feel like they're not able to get traction on these issues in the capital markets. So that's one of the issues that I'm hoping we'll address today. The structure of the session will start off with some brief interventions from our speakers. Then we'll continue with the conversation amongst the speakers up here. We will then open for some questions and comments from you, so sort of sharpen your thoughts and your critical questions and comments, please. And then finally we will move into a wrap-up where the panelists will give each other some pieces of advice and some challenges. So that's the plan, and I've been told that we are going on until 11:45. So, with that, each of the speakers will get 5 minutes to say who they are and their background, and then they'll also say something about the one thought about the real value of ESG that keeps them up at night. This can be a good thought or it can be a bad thought. It can be something that they're looking forward to or something that they're worried about. And please remember, both you in the audience and the speakers, you know, this is not the place to say that climate change is the biggest challenge of our time, or, you know, we're all part of the solution. It's actually set in to be challenging and to put forward your, you know, more critical thoughts and challenge the panelists and challenge the audience. That's why we're here. So with those introductory remarks, we have our first speaker, Peter Michaelis. He's the head of Sustainable and Responsible Investment at Aviva Investors. Peter.
Thank you, Hilda. So I'm Peter Michaelis. I head up the Sustainable and Responsible Investment team at Aviva Investors. We manage around about 4 billion of assets in SRI across a range of asset classes. So we have fixed income, long-only equity, and long-short absolute return. I'm really pleased that over the past decade that we've participated a lot in the growth of assets which have moved to SRI strategies. And we particularly pride ourselves on the sort of strength and robustness of our integration process, of how we integrate ESG issues into our investment selection, and also the success of our engagement activities. As to the question, what keeps me awake at night in this area? I guess to me it is the paradox. It's a paradox that over the past 10 years we've seen huge growth in responsible investment in SRI assets. And yet, the financial industry as a whole, I think over the past decade, has probably been less responsible than it ever has been. So let me just sort of explain a little bit. About 10 years ago, SRI was very marginal. It was almost regarded as faintly ridiculous. We had a famous comment from a chief executive of a FTSE 100 company who said, "Oh, SRI, that's something that only teenage girls are interested in." And you know, it's widely regarded that business was business. Now look at how far we've come. I think there was an article the other day saying 1 in every $8 flowing into funds in the US was going into responsible investment strategies. The same chief executive, it wouldn't be the same chief executive, because it would be on very pay packet. But the chief executive of the same company would now be sort of nodding sagely and saying how important corporate responsibility is to their company. They'd be saying, you know, we're members of the Dow Jones Sustainability Index. And responsibility would be part of their DNA and other phrases. We've also seen huge growth in the numbers of signatories to the UNPRI. It's 20 trillion. Yeah. So from that perspective, it's great. Finance is responsible, it's sustainable, it's integrated ESG. And yet, if we try and look at what, over the last 10 years, what have we achieved as a broad industry? Look at the triple bottom line of our industry. So it's not the responsible investment bit, but the whole financial industry. Look at environmental factors. I think every major environmental indicator has got worse and is getting worse during accelerating stuff. Whether it's forestry, whether it's climate change, whether it's fisheries. You look at the social sort of outcomes. It's true, poverty in Asia has got much, much better overall. That's the positive. But the financial crisis has put vast swathes of society in a much more difficult situation financially. Millennium goals are going to miss by a country mile. And then you look at the financial returns. The one thing our industry is supposed to be excellent at is allocating capital sensibly. And it's been a total disaster. We managed to bankrupt banks, sections of society, and indeed whole countries. So in that regard, I would say that the financial industry has become much, much less responsible. And that's what I see as being the paradox and the conundrum that we have to solve. And in that time as well, you've seen that ESG issues, it's become so much clearer that they are important to investment returns. You look at BP, you look at Lehman, Citigroup, you look at GM, which pursued a poor environmental strategy. If you compare that to how Toyota's done. So it's become so much clearer and self-evident that ESG issues are important for investment returns. And yet, we're still seeing short-termism increasing. The average holding period of the company is now down below 7 months. Chief executives stay with their companies for less than 6 years on average. And that is the paradox to me, and that is the challenge that I think we all face, is integrating ESG issues into valuation, making strong returns from them, and making the right capital allocation decisions. So I don't sleep that well at night, but I am optimistic, but I'm certainly not complacent. So that's my summary.
Thank you very much, Peter. Is this working? Excellent. Slightly depressing, but certainly some value in environmental and social issues. So maybe the question won't be so much what is the real value of ESG, but what will it be going forward? Maybe that's one of the important issues. Our next speaker is Saskia van den Gietman. She is Advisor for Responsible Investment at PGGM in the Netherlands. Please, Saskia, thank you.
As Olga said, I'm Saskia van den Doel. I'll keep it short, not a full long name. I work for PGGM Investments. We're an asset manager of pension funds, and amongst the clients is the pension fund for the care and welfare sector in the Netherlands, which with over 2.2 million beneficiaries is the third largest pension fund in Europe, so considerable. We invest nowadays about 100 billion euros in asset classes, in a broad variety of asset classes across the globe. I work within the responsible investment team, where I'm responsible, amongst other things, for engagement with our companies we invest in on human rights, and I have a background in consultancy and corporate sustainability. At PGGM, I'm also responsible for trying to find ways for measuring the impact of our activities, responsible investment activities. And with this in mind, I was thinking about what keeps me up at night. I was listening to the first speaker, Mr. Malkin, and I couldn't agree with him more. That the